let's go ahead and get started. Tonight, I want to share something with you that's absolutely changed my financial outlook on life. And without getting into a lot of detail, I had an opportunity about 6 or 8 months ago to kind of hit the reset button and take a look around at how money was being made, the new things that entrepreneurs were investigating and getting into. And I had an absolute blast doing it. And I found some really unique things that in such a short period of time have made a dramatic difference for some of the people on this webinar tonight, but everyone that has gotten involved with this so far with this particular method of creating income is doing really well. But what I want to talk about tonight, how I created a passive 7-figure income in just a few short months by arbitraging cryptocurrencies. I'll give you a couple disclaimers. First, I'm not a financial advisor. I don't hold any license that says I can offer you investment advice. All the information you're about to receive is based on my personal experience as an individual crypto enthusiast. It's just provided for entertainment and may not be considered financial advice. Cryptocurrencies are highly unregulated and carry significant, even 100% risk of loss. So you could lose every penny. Past results are no indication of future performance, and by continuing, you agree to hold harmless www.cryptobasictraining.com, its owners, associates, affiliates, vendors, customers, and principals, and namely me. This information carries no warranties or guarantees expressed or implied as to its accuracy or suitability, and you accept 100% of personal responsibility for any actions you may or may not take as a result of consuming this information. Basically said, guys, the world of crypto is the Wild West, and it is as dangerous and tricky as it is lucrative. So just keep that in mind. Now, for those of you that have had a little bit of experience with cryptocurrencies, bear with me for the first few slides. I think it's important to try to take something complicated and make it simple, and it's going to apply to what I want to talk about. So I'm going to go over a couple of basics. For those of you that are brand new, I want to make this as turnkey as I can as far as how to understand what's going on here. But I think that even if you've got some experience in crypto, you'll find that this is a new approach. It was maybe November of last year that I was actually making fun of people that were in the cryptocurrency world with playing with this fake money in the sky. And boy, was I wrong. When I really sat down and started to take a look at what was going on and the technology underneath it and how it was changing entire industries, I now think it's going to be bigger than the dot-com movement. I'm confident of that. So what is cryptocurrency? Well, you know, people will say cryptocurrency is this made-up money that really has no value. But I can tell you from carrying around these little dollars on the left that it has no value. You might be able to wallpaper your wall with it, wipe your butt with it, but it's a piece of paper. The intrinsic value of that thing is nothing. And it's just the value that we as a society say it is. So if it's got a 1 on it, it's $1. A 5, it's $5. And if we didn't all agree to that, it would be worthless except for the paper it was printed on. And some people say it is anyway. Cryptocurrency, like you see on the right there, there's a little symbol for Bitcoin, but there is no actual paper or coin. Cryptocurrency is just a value that's agreed on, again, by different people. And these currencies have different names. Some of them are tied to specific companies or uses that we'll talk about in a second, but without an agreement that there's a value there, neither dollars or any foreign currency or cryptocurrency would have any value at all. But because people say it has value, it does. That may sound like a little bit of a simplification, but that's really what's going on with any exchange of value. The blockchain is something that's complicated. It's tough to understand at first, but I found a couple of unique ways to describe it. A blockchain is kind of like your permanent record. Like when you went to grade school and you got in trouble and somebody said, hey, that's going to go on your permanent record. Well, everything that happens in the cryptocurrency world, with very few exceptions, has a permanent record on the internet that you can look up forever. So if I buy a product or service or exchange value, there's a transaction record of that. Now, for privacy's sake, crypto is very private. It's all numbers. And some coins specifically are made to have more privacy than others. But if you look at an ATM receipt here on the left, it's got some things on it like a time and date stamp, and so does the blockchain transaction. It's got an account number, so does the blockchain transaction. It shows where the funds came from and where they went to, how much they were, and what currency. In the left, it's dollars, and in the right, it's Ethereum in this case that we're looking at. And there's even a surcharge amount, which is called an Ether gas price on the right. That's like your ATM fee on the left. So there's very similar components to a transaction. The difference is when you take money out of your ATM, it's private, and anything you do in crypto is public. So while I may not know whose transaction it is, I see the checkbook for the entire world, and I can watch every transaction from everyone to everyone. I just don't know who they are. So let's talk just a second about what are altcoins. Now, everybody probably has heard of Bitcoin. It was the cryptocurrency that, not the first concept, but the one that became an actual traded currency first. And Bitcoin's been thrown around. You know, people are like, well, crypto's dead because Bitcoin, wasn't it at 20 grand and now it's at like 7, so that's over, it didn't work. That's a very short-sighted way to look at what's going on here. Bitcoin was just the beginning. Altcoins are everything else besides Bitcoin. And Bitcoin kind of opened up this floodgate, and all of a sudden people went, wait a minute, people will give me a value for this thing in space or a piece of paper like $1, and we'll agree on what that value is, and we can trade that. We can trade it for goods and services. And in the beginning, the libertarians especially, and the people that were kind of anti-government loved it because it wasn't tracked. It wasn't a currency that could be taxed. It wasn't something where everybody knew what you personally were buying, even though your transaction was on the blockchain. And so it became popularized because at first, some nefarious people decided, hey, this is a great way to buy pot. It's a great way to do illegal things and launder money and exchange value where nobody's eyes are really on you. And it had a sketchy past. Silk Road was a website that was famous for selling all kinds of drugs for Bitcoin. And everybody loved it because it was like going down to, Amazon.com for drugs. Well, Silk Road got shut down, and many people thought that that was going to take cryptocurrencies and Bitcoin along with it, and it didn't. In fact, it grew right after that Silk Road site went down. And it just keeps growing and expanding at a rapid pace. So when you trade cryptocurrencies, if you had dollars and you handed them to somebody, chances are they'd put them in their wallet. Well, digital currencies also have a wallet. Those wallets are a place where you store basically a secure set of numbers, and those numbers tell you how much of each currency you have, and in some cases, transaction histories. Wallets come in all different shapes and sizes. You can get a hardware wallet that actually hooks to your computer, and those are the safest because they're cold wallets. They're offline. You can actually load your secret set of numbers, which tells the rest of the world how much you own of any currency. And you have the unlock keys, and you can take those, disconnect them from the internet, and put them in a safe, just like you would gold coins or a stack of dollars. And they're the most safe. And it's a way to store electronic currency. There's also desktop browser wallets that are local to your computer, and they're not as safe, but you can take those online or offline depending on if your computer's online. And then the less secure but used most often for transaction are online wallets, where your cryptocurrency is stored for a short period of time in small amounts as you're making transactions, and then eventually they end up in a more secure place when you hold large quantities. We'll talk about how all those fit together here in just a second. But traditional exchanges. So if everyone thinks about the stock market, we've all heard terms like New York Stock Exchange or NASDAQ, where stocks and bonds are traded, or foreign currency, Forex, where foreign currencies are exchanged for one another, or silver and gold, precious metals, oil, commodities. In fact, one of our little group here that's made an enormous income in what we're talking about tonight used to own his own commodities and Forex firm, and has recently just left that to pursue crypto full time after years, well over 15 years of having a traditional firm. Well, nobody thinks twice about traditional exchanges. They're pretty common. But what you may not know is that cryptocurrency has a vastly greater number of exchanges. The largest is this guy right here. CZ is his nickname. He was on the cover of Forbes magazine because he became a billionaire in 6 months when he started Binance. Binance is the cryptocurrencies, that world's largest exchange. And right now, these numbers are conservative. These are according to coinmarketcap.com, which is a great resource for you to check out a global view of the whole cryptocurrency world, coinmarketcap.com. But just the recognized exchanges on CoinMarketCap, there's 219, and you see Binance being number one up there. You might have heard, if you've been in the crypto world, of exchanges like Bittrex or Bithumb or Bitfinex, GDAX, which is also Coinbase, Kraken. But again, there's over 219 exchanges, and there's over 1,900 coins or altcoins recognized by CoinMarketCap. And CoinMarketCap is kind of the default industry place to go for legitimate things. They keep lists and they track coins and exchanges and what's going on in the crypto world. And so if you get something listed on their site, it's sort of a seal of approval. Well, think of this. We trade dollars against maybe 20 or 30 foreign currencies, not even that many in the trading pairs, if I remember correctly, in the Forex market. I don't know how many different commodities there are, but there's a handful of exchanges for each one of those things that could be traded. But in crypto, there's 219 recognized exchanges with over 1,900 different coins being traded every day where people say they have a different value. And they're willing to trade one coin for the next, or dollars or yen or francs for crypto. And because there's trading going on, there's money to be made. What I did back in the early part of this year, when I just call it an opportunity to take a look at making money in a different way, I sat down and I created this. I knew I wanted to get into what was next. And as Wayne Gretzky talks about, go where the puck's going to be, not where it is. Like, how do I get ahead of this wave? Because I was around and made a fortune during the dot-com wave. Not because I started some crazy dot-com company that meant nothing, but because as internet marketers, we helped people use the internet as a tool to make huge income. And as a result, we did ourselves. So when I looked at crypto, I was like, all right, way a long time ago, I used to be a stockbroker. I have no license. I'm not a financial advisor, but I knew enough to be dangerous. And I knew enough to at least look and say, well, how is money being made in the whole world of crypto? And it's funny, I went through a process of just spending 12, 14 hours a day, literally from sometimes 4 in the morning until I couldn't stay up, going through all kinds of research, watching every YouTube video I could get a hold of. And I narrowed down the ways to make money in crypto. And then I scored them based on investment, how much money did it take, how much risk there were, how much time it would take to make money, what was the long-term potential. One of my categories was, does it require business partners? Because if it was a yes, then I was probably a no. One of my goals was actually to find an income that wasn't dependent on people. And if you understood a little bit about what put me in that place and that mindset in the previous few months, I wanted to be in control of things and not depend on partners that could let me down. So I scored it on that. I scored it on risk. I scored it on fun. And I gave a 1 to 5 for all those categories on things like day trading, mining, which you might have heard of if you talk about crypto, something that used to be profitable that's really not anymore. Long-term holds, where you buy and just hold on to these coins and see what happened and hope that you might get the next Bitcoin. Well, I scored everything out, and I started doing some of these things along the way, and it's ironic that I didn't come back to arbitrage bots until almost the near end of my investigation. But when I did, I recognized that I'd scored it the highest because it's something that's done automatically, and it's something where you don't have to sit tied to your computer all day, and you didn't need a ton of capital to get started. The ROI was huge. It didn't require partners. The ramp-up time was super quick. It was a blast because literally what I do is log in at 11 o'clock every night, check my earnings, and go to bed. That's my daily work and what I'm talking about here. And specifically, it's arbitraging cryptocurrencies. The definition of arbitrage, or a usable one, is the practice of taking advantage of differences in price of the same commodity in 2 or more markets or exchanges. For example, cryptocurrencies on the Korean exchange can be different from those on the US exchange. And an arbitrage trader would be in both exchanges and buy low on one and sell high on the other. And it's kind of like if you were to go to Target and buy a vacuum, and I use vacuum cleaners because somehow I go through those and I just destroy them when I get a hold of them, and I buy a new one almost every year, it seems. But if I could go to Target and buy a vacuum cleaner and take it to Walmart with their liberal return policy and return that vacuum cleaner, only it was $10 more at Walmart, and they gave me $10 more back. I took that money and went back to Target and bought another one, went back to Walmart and returned another one, and did that 100 times a day times $10. That's what arbitrage is. It's just buying products at different prices. In this case, we're talking about over 1,900 coins on over dozens and dozens of exchanges that they've incorporated into this platform. This is the specific platform that I'm talking about. It's called arbitraging. They have a coin that they launched, and I caught the very end of that launch. I wasn't able to actually buy any of these arbitrage coins on the launch, but that's not the important part. The coins were simply funding the company that is a software company that created this technology that allows you to do this arbitraging automatically. They have a product called ABot, which is an automatic bot. They have one called MBot, which is a manual bot. It's the same technology that you run yourself. And they're listed on CoinMarketCap, so they've been legitimized. They're on 3 external exchanges, and their coin symbol is ARB. You can look them up. Right now, this is as of about 48 hours ago, their rank is 396 out of those 1,900 coins, and they're about 6 months old since their ICO was finished. And the first question I asked when I found these guys was, do you really have a bot? Now, the reason I say that, the cryptocurrency world last fall was really ugly. There were a handful of companies, maybe 20 or 30, that were even listed on CoinMarketCap. They even had coin prices in the hundreds of dollars. They were being followed and traded that said they had legitimate software that was doing trading all day. And that if all you did was put your money in and sit there, that they'd trade your money for you and give you a return. And you can guess, because arbitrage is not arbitrage, but cryptocurrency is unregulated, there's nobody to go cry to when they just disappear one day with your money. And that's exactly what happened to a ton of people last year. November, December, it was ugly. BitConnect was the most famous scam going. They would say that you would make about 1% to 1.5% a day, letting them trade your cryptocurrencies. And that if you would just lock up your money for 120 days, you'd get a little bit more return. Well, that's a red flag. And so all these people had their money locked into what became one of the biggest Ponzi schemes ever. Now, I'm telling you all this not to scare you off, because the fact of the matter is they could have been trading and making 1% to 1.5% a day. One of the things I did in my research was I day traded cryptos, and my actual results were 1.2% per day. And anyone can do that. You don't have to be a technical genius to figure out when to buy and sell these things. There's actually services I paid $400 or $500 for in crypto that would tell me, hey, buy this coin at this price and sell it when it goes up to this much. And I tracked it, and I could sit there for about 6 hours a day, all day, and make 1.2% of my money every day. Well, if you do a spreadsheet, it doesn't take you long to realize that 1% a day is a fortune in a really short period of time. So all this happened last year, and one of my first questions is, do they really have a bot? One of the gentlemen in our group, actually, his company worked with another company that went out of business, and the one thing he said was, I wasn't really sure, even to the end, if they really had a bot. He believed they did, but nobody ever showed it. So it's funny, if you look on the arbitraging website, one of their frequently asked questions is, do you really have a bot? And their answer is this: yes. Software is actually based on an open source bot called Blackbird, which you can look up. They took this open source code and then modified it. So that's what they said they did. This is a picture of my back office in the MBot. The MBot is the manual software that I can run and control and make trades on, and arbitrage trades. And what you're looking at here is a list of exchanges across the side and across the top. For Bitcoin in this case, I've got Bitcoin selected up there, and you see different prices. And wherever the price is positive, where it's not red, that means I can buy it on one exchange, move it to the next one, and sell it for more. Well, I've got access to this, so I know it's real. I've logged in. I've pulled actual trades. You hook up your exchanges to this, and you basically trade your own money. Now, the ABot, the automated version of all this, was the first product to be released. And I'll talk specifically about that. But the MBOT proves what's really going on in the ABOT. The MBOT meaning that I hook up my money and my exchanges and I learn how to trade using their software. And what's cool about this is I can click on a button and, for instance, in this trade, it's Bitcoin. You can buy it on BTC Markets, which is an Australian exchange, for, in this case, $6,998 per Bitcoin. And I can turn around and sell it on BitThumb for $7,067. So that represents just under 1% difference. I buy $6,998, sell for $7,067, and then I rinse and repeat and do that over and over and over again. So I'm not just making 1% one time. I'm making 1% as many times as I can turn that trade over. And that can be done very often in a day. So small differences in prices across all these exchanges and all these coins are waiting for you, like a discount purchase that you can trade in for more money. And that's what's going on underneath. And the MBOT, again, it legitimized and proved the fact that these guys were the real thing. So what's the ABOT? Well, most people don't want to day trade. Most people don't want to learn how the complicated ins and outs of setting up APIs and exchange communication and running trades and moving money around and balances. And you have to have a lot of money in a lot of places when you're doing trading. Because you're making very small percentages, you have to move a lot of money around. Well, a lot of people don't have that to invest. So what the company started with was an automated bot where you could use pooled funds and they would trade for you using the same software. And that's what's going on here. That's what we're talking about. Pooled funds, everybody's used to things like mutual funds. That's exactly what a mutual fund is. Or a real estate investment trust. If a group of people get together and buy an apartment complex. I know we've got some people on the line that own apartment complexes all over the United States. So it could be a formalized trust. Now, in the United States anyway, in most developed countries, if it's going to be pooled funds, you need special licenses, you need SEC clearance. Crypto's different. Crypto doesn't live anywhere. Even if a coin is launched in Bermuda, let's say, or somewhere offshore. Generally, whoever runs that company or that coin, they're located all over the world. It's called decentralization. So they technically don't fall under the jurisdiction of any specific country. Now, I'm not an investment advisor and I'm not a legal advisor, but what crypto does is it removes the currency from the dirt. There's no country associated with each one of these coins like there is with dollars or francs or yen. There's just coin names. And so they can, at this point, pull off pooling funds together without going through a big formal process. And the good news for us is that means it's simple. This is the return, based again on about 48 hours ago, of the automated bot over the last 30 days. It's made 24.77% over the last 30 days in this pooled funds automated bot. And if you had money in this bot, you would have a percentage of the return of the bot. And it's the way math works. If there was $10,000 in there and you had $1,000, you'd make 1/10 of the return that day, but your percentage on your 1,000 is the same as everybody else's, no matter how much you have in there. So you see that on this particular day, it was 0.71%. And the 30-day rolling average was 24.7. Now, there's nowhere that I've seen in any kind of investment vehicle, any kind of bank account, CD, mutual fund. There's nothing out there that produces this kind of ROI, short of day trading, like they do with the big banks, where they make millions of dollars on a very, very small percentage change. That's exactly what arbitraging is doing. So if you look at this, it's an average of 0.00825% per day. If I take that 24.7 and divide it by 30 days, that's what the actual average is as of 2 days ago. Well, let's take a look at what that could mean. Now, this is just for entertainment purposes. Let me say it more clearly. This is probably all BS. And I have to say that because I don't want to get myself in hot water. This is not a prediction. This is just fun math on a spreadsheet. Now, I can tell you what my personal results are, and they're actually better than this. But take a look at what could happen. If you started with $10,000 on September 1st, and you had that percentage, that 0.825% per day, after 30 days on October 1st, you'd have about $12,690 if you reinvested your profit every day. Your potential daily income would be $105, and your yearly potential would be $38,000. Think of that for a second, because a lot of people like to talk big numbers. What if you had $10,000 in savings in a money market fund? What are you going to make, $50? $500 for a year? I don't even think you get that. What if 10,000 could create a $38,000 per year income? And here's what's interesting. That $12,690 didn't go away. You didn't spend it. It's still sitting there. That's just the interest income, let's say, or in this case, arbitraging income that would be spun off that much money. Take that out 180 days. Your account, if you just reinvested and didn't take daily profits, would be up to $43,000. And look what happens after 360 days. Just under a year, $190,000 and monthly income of over $47,268. That to me sounded like Walt Disney, make believe, right? Until I experienced it myself. And like I said, my numbers are better than this. And I started, I believe, the last week of April. I had a total fiat currency, meaning dollars, invested of about $42,000 and some change. And today that's over $625,000 that works for me every day, whether I get out of bed or not. So let's talk about how we do that. The first thing you do to participate in arbitraging with this automated bot is you have to turn dollars, in this case, if you're in the United States, or fiat currency into cryptocurrency. And in this case, arbitraging uses Ethereum instead of Bitcoin because Ethereum's a very rapid transaction. If you were to buy Bitcoin and send it to somebody, it could take 4 to 6 hours maybe sometimes for that transaction to show up as legitimate on the blockchain. And the way that works is there's things called miners that are out there, and they validate all these transactions. Well, it's really slow to transfer Bitcoin around. Ethereum's almost instant. And Ethereum's actually the second largest cryptocurrency. You can see right now the market cap on Bitcoin is $121 billion. Ethereum's about 1/5 of that. It's about 28 billion. But there's a lot more circulating supply, and it's very liquid. It's like the cash of the crypto world, if you want to think of it that way. So the first thing you do is you buy some Ethereum with your dollars. You can do that in a couple of places. Two of the most popular on-ramps to convert dollars into crypto are Coinbase, which is an English firm, and then Gemini. And Gemini was started by the Winklevoss brothers, the guys that sued to get part of Facebook back, that say that it was their idea with Zuckerberg, if you've seen the movie. These guys have been into crypto since right after that. And they've been trying to do things like take Bitcoin onto the national exchanges through an ETF in regularly traded stocks. But there's two places that you can start with to buy your Ethereum. And you buy Ethereum because now you have money to spend in the crypto world. Like you have to buy a special ticket to get products there. In Coinbase, you simply set up an account. You can tie it to a debit card, your bank account, or a credit card. Some credit cards don't allow you to buy crypto, some do. There's some drawbacks if you do an ACH transfer because in Coinbase, for instance, we tried to buy some Ethereum one time, and the price of Ethereum goes up and down every day. And I think we put about $1,000, $1,200 in, and it was almost 10 days doing an ACH transfer before it credited in the account. It's way too slow. And the price of Ethereum, went crazy. It went up or something, and we lost a bunch of money, potential income, because it was too slow. The way to use these, ideally, is that you wire transfer money in. And unfortunately, on Coinbase, the minimum wire is $10,000. But then your credit's almost instant, and now you have money to spend in Coinbase. You can turn that into Ethereum, and now you've got the actual currency you're going to need to do arbitraging with. Here's a picture of what it would look like if you bought Ethereum on Gemini. It looks more like a traditional stock exchange where you put in a market or limit order. And I know this can be a little complicated. Coinbase is one of the reasons that it's popular is because it's super simple. The downside is the fees are higher on Coinbase. Unlike your bank that might charge you an ATM fee, some exchanges have no problem charging you 2, 3, 4, 5% on your money. So avoiding those fees is part of maximizing your profit. But now let's say you've got Ethereum. What you do next is you set up a wallet so that you can send your Ethereum to yourself from your Coinbase or Gemini account. And I use MetaMask, which is an Ethereum wallet that hooks right to a Chrome browser. It's a free download. It's a Chrome extension, and it allows you to accept and send Ethereum. So you would transfer the Ethereum you just bought into your MetaMask wallet, and then you set up an arbitraging account. You must have a MetaMask wallet address first, because the way arbitraging works, to use their bot, it's going to tie your wallet to your account, and it's only going to accept money from one place. And when you make profit and you want to take it out, it's only going to send it back to one place. So it has to have your wallet address as part of the registration process. For this reason, you want to use the referral link that was sent to you by somebody. If you're here on this webinar, you either have an account set up, or you may be a guest of somebody who has an account set up, and they sent you a referral link. You're going to need somebody to hold your hand through this process. We found that you can do it yourself, but it's much quicker and easier if you have somebody just walk you through the steps. And so use their link that they sent you. And yes, they'll get a small, very small affiliate commission, but they will work for it because they're going to have to hold your hand through this process. I've even gone so far, and I do this more often than not now, just telling somebody to give me an email address and I'll set up an account for them and I'll do all the work, because I can do it in a few minutes now. But once you've got your wallet address and you register at arbitraging, you are now set up to deposit or send your Ethereum into the platform. You click on your browser on the little fox, which is their symbol for MetaMask, and you can copy your address, and that's how you get it in to register in the first place. And then you would deposit your Ethereum into the arbitraging platform. And this is one of the first screens you see yelling at you in red, telling you you better be sending your Ethereum from this address that you used to register to this deposit address. Basically what you're doing is you're transferring funds into this, and you want to make sure the numbers are right. Once you do that, you then have to go buy arbitrage coins. Now, ARB coins, or arbitrage coins, are the entry fee you pay to use their software. Basically, your Ethereum was bought with dollars, and it has a dollar value. You can see up here in this screen, $2,210.70 is what the dollar value of the Ethereum I deposited is. But now I need to go buy their coins, and then you use their coins to run the software. So I take those coins, those Ethereum coins, into their exchange, and I buy arbitrage coins. Then I take the arbitrage coins that are now saying, okay, Scott, that's your entry fee. You've now purchased our tokens. We'll let you go ahead and use our software. I take those back into my wallet, my internal wallet this time in the arbitrage platform, and then I transfer them into the arbitrage bot. Now, I went through all those steps that may seem unnecessary, like why couldn't I just deposit dollars into this? Well, there's legal reasons for that. But why couldn't I just deposit Ethereum into this? Maybe someday you can, but the coin that they launched, the ARB coin that's openly traded on exchanges, has a value. And the value is this. This company has a legitimate, automated arbitrage trading platform that sits there and cranks out income for you every day. That gives their company value. And so in order to use the software, they want you to own shares in the company, let's say. It's not technically shares, but it's their coin. Once you buy the coin, you can deposit the value of that coin into their bot, and it will sit there and crank out a return every day. So you go through a few of these complicated steps, along with the help of whoever sent you a link. And this part actually is very quick. It takes about 5 to 10 minutes. I did it for a gentleman earlier today. We were on a screen share. He was set up and ready to go in less than 10 minutes. So once you've been through this once, it's no big deal. Now what happens, though, is you've got a deposit actively working inside what they call their A-bot. Let me explain what's on the screen. The screenshot at the bottom was my profit that was paid out. When was this? The 9th? No, 1st of September. And it shows that my A-bot active investment profit, and my credit was 1,691 arbitrage coins. So here's what happens. When you buy the arbitrage coins, you deposit them into the software, and they give you a dollar value for it. You can see there on the top right-hand corner of the screenshot that my ABOT active investment is $625,255. That's in US dollars in value. And so that is in arbitrage trade all day, every day. You see in this particular screenshot, today's profit down in the bottom left was 0.69. So if I take the math here and I go $625,255 times 0.0069%, that means my daily profit in dollars should have been $4,314. And it was. And they pay out their daily profit in arbitrage coins. So that $4,314, how many coins is that? Well, at the time that they paid me, which is 11 o'clock Central, every night, same time every night, the coin was worth $2.55. So they gave me 1,691 arbitrage coins. Now, what can I do with those? It's funny money, right? What good is an arbitrage coin? If I truly had $600,000 in there, I'm going to want dollars, right? Well, here's how it works. This is how money gets into the system. A dollar goes into Coinbase, let's say, gets traded for Ethereum. You send that to your browser wallet, and then you deposit it into the arbitrage system. You take the internal wallet inside their system and your Ethereum, and you move it to their internal exchange. You buy arbitrage coins, move them back to the wallet, and finally they go into the ABOT and start making you money. But now I want to take money out. Here's how that works. So you've got money in the ABOT that every night at 11 o'clock Central posts a return, and they pay it out in arbitrage coins. Well, all I do is the reverse. I take those arbitrage coins, take it back to their internal exchange, trade it back to Ethereum, send it to the internal wallet inside their exchange, and then transfer it out to my MetaMask. Now I've got it in my hands, so to speak, on my Chrome browser. And now I want to turn it into real money. So almost every day for the last 5 to 6 weeks, I've taken out in Ethereum value from my MetaMask somewhere between $4,000 and $6,000 a day, every day. I don't touch the $625,000 that's in there. I could take that out if I wanted to tomorrow. I could hit a button that says stop the ABOT, and I say, okay, thanks for playing. Here's your value of your account. You don't want the percentage return every day, but you want the account back. They give it back to me in arbitrage coins. I sell it to Ethereum. I take Ethereum, and here's how I turn it to dollars. I can put it back into Coinbase and sell it for dollars. I can take it to Gemini, or I can use a service called Changely, which takes my Ethereum and puts it into Bitcoin. The reason I want to stop over in Bitcoin for a minute is because there's a couple of things you can do with Bitcoin that you can't do with Ethereum. Namely, you can deposit your earnings onto a BitPay Visa card. That BitPay Visa card has a Visa logo, and when you deposit Bitcoin in it, it locks in your value. So it has a couple of limits on it. You can only put $25,000 on it. You have a $3,000 a day withdrawal limit and a $10,000 a day purchase limit. Well, if your earnings are up to $10,000 a day, or if you just want cash, $3,000 a day, you're doing pretty good. And you can wire transfer out of Coinbase or Gemini or a couple other exchanges with lower fees even, right into your bank account, which I do all the time. But some of this I just divert over to the BitPay card. And when you convert your Bitcoin here into dollars, it locks in the value. So it doesn't matter to you anymore if Bitcoin's up or down, or none of that matters. You've now got spendable money on that Visa card. If anybody knows the history of cryptocurrency, there's a famous story of stupidity where this gentleman had, I don't know how many Bitcoin, but it was a lot of Bitcoin. It was back when Bitcoin wasn't even worth 20 cents, right? So it had no real value yet. Nobody had agreed that it was worth anything good. It was barely being traded, and this guy decided that he would sell some of his Bitcoin, and he bought a pizza with it. He actually bought 2 pizzas. Well, those 2 pizzas would be worth hundreds of thousands of dollars today had he held his Bitcoin because of today's value. So I took my BitPay Visa card and I bought 2 pizzas with it the first night for me and Tiffany and the boys. And then we decided to just prove how well this thing worked, and we went to Mexico with this BitPay Visa card, and we found one of the most exclusive resorts that Condé Nast Traveler had ever reviewed. And we stayed there for a week, and we put it all on funny money, which actually wasn't funny money. It was real money in my BitPay Visa card. We stayed at the resort at Pedregal and had an amazing time. And it was just proof that this whole concept works from start to finish. And it has reopened up possibilities for not just Tiffany and I and our family. We've been able to help people that have made money before as entrepreneurs and then didn't. And that happens a lot. If you've ever had your own business, I'm sure you've experienced that before. Money starts and stops. It's a frustrating process. Things constantly change, as they always will. But we've been able to very quickly get people back into significant income. And the difference here is what you don't have to do. The entire time we were at that resort, we couldn't spend money as fast as we made it. Now, technically I could if I was buying houses or apartment complexes or Bugattis or stupid watches and cars, but that's not who we are. But the fact is, every day on that time zone, 9 o'clock, we logged in and we checked our earnings, and it was far more than we could spend that day, even though we tried. I mean, the dinners in this place are uber expensive. The day at the spa was over $1,000. It's just crazy. We couldn't spend it as fast as we made it. So it has really changed our perspective on what's possible, and really our personal mission now, and it's on a very limited scale, because it's not something that the whole world needs to even know about, is we want to help friends create the same kind of success. This is not a multi-level. It's not a thing where you're going to make any significant money referring people compared to the money that can be made just by running this platform and letting it run and work every day and logging in and checking your earnings. And yes, it's a little bit complicated, which is why I'm glad there's some kind of affiliate program, because you got to hold somebody's hand and really walk them through the process one time, and then they get it, and then it's easy. And there's more money to be made for those people that are really techie, that want to do the MBOT and manually trade their own accounts, that have some money in different places. You know, that's becoming more broadly available. I'm one of the beta testers, but it's about to go into broad release, and it's legitimate. And it absolutely, if you think back to the spreadsheet example, has the ability to change your financial future without changing what you have to do every day. This is not something that takes up a lot of our time once it's set up and going. And it might take you a few hours in the beginning. So here's what's next. Do your due diligence. Don't take my word for it. The steps involved are pretty simple. You set up your MetaMask wallet, you download a Chrome extension, takes about 2 minutes. You register a new account on the arbitraging platform with the link that you were sent by whoever sent you one that invited you here. Read the entire website. Read their white paper. Join the arbitrage ARB Telegram groups, where you can watch the entire public, the whole population of these people having conversations all day about it. I sat and watched this for 2 weeks, and I was unable to buy into the ABOT because I wasn't part of the initial coin offering. They didn't open it up to the public in the beginning. You had to have been one of the ones that bought their coin on their launch to even use it. Well, I sat there for 2 weeks watching people every day, just making just under 1%, and it was making me crazy. And the minute I could get in, literally the day the exchange opened for outsiders, I jumped in, and that was, again, late April. So do your due diligence, get in the Telegram group, see what people are saying, ask questions, have conversations with people. The greatest thing is there's so many people that are loyal fans of this because it is real and they are making money every day, that they'll answer all the questions of every skeptic they can ever get a hold of, because they're laughing all the way to the bank here. The fact that people think this is just another one of those things that happened last November is good and bad. It's good in a way because we don't need the whole world to know about this. But everybody has some skepticism. I was born in Missouri. We're the show me state. So do your due diligence. Start small. Again, this is not something where anyone that invited you here is after your money so that they can make a bunch of money. The people that are here that are using this are already making money without you. They do not need your affiliate commission. You need their help to get into this, though, because it does take a little handhold. So work with them and stick your toe in the water. You know, what's funny is some of the people on the line that have already logged in that I know, their toe in the water was 50 grand, and now they're hundreds of thousands as well into this. And we've got our own Telegram group. I'll show you a couple of groups you're going to want to join. Telegram, by the way, when my friend Scott, also named Scott, told me, hey, if you're in crypto, you need to get on this thing called Telegram, I just about shot myself, because the last thing I need is another way to communicate with people. But to me, it segments this part of my life into one spot that is most important and most fun. So it's the first thing I check every day is my Telegram. And it's a messaging platform that has a lot of privacy built around it, which is a lot of the reason that crypto people like it. They like to be private. They don't want to be public. They don't want people knowing what they make. Download it to your phone, and you can join the Crypto Basic Training Telegram group. That's our internal group. We'll be teaching people not just this, but other ways to make money in crypto as time goes on. And the Crypto Basic Training website is not live yet, but once it is, it'll give you an easy way to share information like this with other people, and it's all free. There's no charge for anything. The ARB official group is another Telegram group you want to check out. This is the general population, so you have to be a little bit careful because you have a range of experience and attitude and wisdom in this, and everything from a 14-year-old to an expert could be in there. But there's helpful admins there. And through a relationship with one of those gentlemen, it basically led me down the path of doing my due diligence to verify it was such a real deal that I was willing to go all in with this. Also, the ARB price bot gives you every 5 minutes price, volume, deposits, rank, market cap position. It keeps you updated like a stock ticker. And then finally, the ARB broadcast in Telegram. That's all the social media posts, primarily people that are making YouTube videos about this, how-to videos or result videos. You can go on YouTube and find a lot of those. But again, buyer beware, be careful of whose link you click on. You want to work with somebody who can hold your hand and walk you through this, because it's very easy to stumble on a few steps. But again, once you do it once, your work is basically through. You decide after you've got this running, hey, do I want to increase the amount of fiat currency I want earning for me every day? And if you sit there and play with the spreadsheet enough, most people find that after they stick their toe in the water, they do. And then we all laugh about it at 11 o'clock Central. Thanks for your time. I really appreciate, especially on a holiday, you carving out time for this. I will get a recording of this that's edited up probably as soon as tomorrow. And I'll broadcast that out to the people who would have invited you here if you're not already on our Telegram groups or one of our lists. And I encourage all of you to check this out. It is certainly not the only way to make money in cryptocurrency or entrepreneurship, but to date, I've never made more money quicker with less work and more fun than this exact method. And I see no end in the near future for this. I expect that this will go on for years as these currencies and exchanges mature and eventually start to consolidate down to a few. But for the next few years, it's all out fun. So thanks again for your time, and I appreciate your attendance.